Glad you can be with us today. This afternoon, I would like to speak to you all about Voracity. Voracity is what I call my baby. It's a strategy I've worked on for many, many years. I don't think I actually have done this presentation on investor inspiration before, so this would be a first with Voracity. But this strategy, believe it or not, started to come together over 20 years ago. The guts of it came together very quick. But over the past 20 years, I've been tweaking it and refining it. And we'll get into the details in a minute, and I'll show you many, many examples. But I briefly just want to say what's taken me so long to get it to where it's at today is trying to find a way to minimize risk without capping the upside. And I think we've finally done that. And so I'm excited to share this with you. Please do remember that trading can be risky, so please don't trade with real money until you are completely comfortable with the system you are using. As Renee said, I am Vince Vora. I'm the head trader here at Trading Wins. I am the developer of Voracity and among several other strategies, but this is the one I am most proud of. Now, in today's presentation, I'm going to start with my money management rules. I'm going to quickly go through those. I never want to share or hand out a strategy without the money management rules that go with it. Then I will speak a bit about the components of the Voracity system, how this came together. This was my search for the Holy Grail. Then I'll talk about how it works and why it works, but more importantly, how this can work for you. As always, along the way, if there are any questions, please type them into your chat, and I'll do my best to answer as many of them as I can before we wrap up today. So let's get straight into this and talk about the money management strategy. Now, there's 5 main points to this. The first one, trade with a positive mindset. Some of you may discard this very quickly, but I encourage you not to. It is a very, very important piece of your trading. In other words, over the past many years, I have coached hundreds, if not thousands, of students. And during that time, what I have come to realize is that when someone is not quite feeling well that day, or is a little distracted, has something on their mind, that's when they make the most number of mistakes, and usually they're the biggest mistakes. So I would really encourage you to make sure you turn off any distractions, that you sit down with a positive mindset and a clear mind more than anything before you trade. Then I encourage you to trade with an amount that feels insignificant to you. The reason being is trading is really all about how you manage a trade once you're in it, not so much selecting the entries and exits. Now, the Voracity system will select the entries and the exits for you, completely automated. It's a system based solely on technical analysis, but it has been extremely accurate over many, many years and throughout many different types of markets. But selecting the entry is not the biggest part of the trade. How you manage it is. Reason why I say that is if you're ever worried about the amount of money you have in a trade, it means you've put too much in there. And when you're worried, you won't be able to think clearly. You won't be able to manage that trade the way you should. So always, always trade with an amount that feels completely insignificant to you. The dollar amount doesn't matter. What matters is that it feels insignificant to you. Another way that we like to reduce risk in the market is to make sure that we never put any more than 5% of our account balance in any one trade. Now, the goal here really is that as you build your account, you want to reduce that percentage. Okay, so in the long run, you'll actually end up with a bigger amount of money per trade, but on a percentage basis, that should come down, hopefully, to a goal of just 1% of your account balance in any one trade. When you can get to the point where you're only putting 1% of your cash balance into a trade, you are doing very well, and you will completely satisfy the second rule, which is trading with an amount that feels insignificant to you. And that's a very important part of this money management plan. Now, there are events that we simply do not or cannot ever control in the markets. There are unexpected events that happen. like a 9/11, for example. And the reason why, for that reason, I should say, we always make sure that we keep half of our account in reserve. In other words, in cash. It may sound extreme. It may sound like, well, I'm going to put half my money there and it's not earning anything. This is really for your mindset, for your sanity, and to make sure that even if something dramatic as 9/11 were to happen again, no matter what kind of loss you take, you still have half your account to put back into the markets and make back those losses, okay? Now, lastly, but certainly not least, what you want to do is spread your trades out. You never want to jump in with 6, 7, 8, 9 trades in one direction. In other words, on any given day, when the market makes a strong move, either up or down, you will get many setups in the same direction. Your job, though, as a trader is to compare those setups and select one, maximum 2 trades for whatever time frame you're trading, okay? And 1 or 2 of the highest probability trade setups for that particular period, and only that. Reason being, again, is if you put multiple trades on, and the very next day we see the market completely retrace, which is what we've seen many, many times, you're going to find yourself in a huge hole right off the start. And that's what you want to avoid, okay? So you want to be selective with your trades. You want to trade with the proper amount, okay? And more importantly, an amount that feels insignificant to you on days when you're feeling well and focused, okay? A couple other golden rules or sayings that we like to use. You will never go broke taking profits. The reason why I always include this is for those of you who may just be starting out. Generally, when someone starts out trading, they start with a smaller account. And so the reason why I encourage you to take profits quickly when you see them at first is A, you want to pad your account, right? You want to grow your account as quickly as possible. That way, then you can manage it appropriately. And secondly, by taking those profits at the beginning, not only will they give you confidence in the system that you're using, but also in yourself as a trader, which will then go a long way to help you succeed from there. And secondly, if there's one thing that I'd like you to take away with you today from this session, it'd be this. I need you to understand that it's not about you. In other words, whether you're right or wrong on the direction of a stock or a Forex pair or a futures contract, okay, doesn't really matter. If you're in this to be the world's greatest stock picker, you're in it for the wrong reasons, okay? You're going to end up losing money. What you should focus on is execution. In other words, if you execute your plan appropriately, okay, then this becomes a matter of how much you make when you're right versus how much you lose when you're wrong. In other words, if you execute properly, you can control your losses, you can control your risk, as well as taking proper profit targets, okay? Now, we're going to show you the system. We're going to show you Voracity, and the software will walk you through and show you when to get in, when to get out. Your job is just to execute, to enter the orders at the right time, to manage that order appropriately, and to exit it at the right time. And the software, believe it or not, will hold your hand through the whole process. So let's talk about the components of this system. There are a number of indicators as well as oscillators that make up this system. Again, it's been tested, not just back tested, but forward tested with real money in real life situations over many years, with several indicators. And this particular combination that I've come up with actually works very well. I know how well it works from all the backwards and forwards testing. I hope I can convince you today of how well this can work for you by the time we're through with this presentation. So what was it designed to do? Well, it was designed to catch the big moves. Unlike some of our other strategies, like our winning momentum strategy, our favorite trade setup, etc., those, yes, were obviously designed to help you succeed in the markets, but those were really designed to find the safest area on the chart to trade, get in and out, take a piece of the action, and move on to the next trade. This one was designed to catch the big moves while still keeping your losses small. In other words, we want to make sure that when things do not go our way, the system gets us out of the market very quickly. But when things are going our way, it keeps us in the market for the better part of that run. Okay, so keeping losses small while keeping gains unlimited. In the long run, that's the real key to this. Okay, and that's why the money management part of this is extremely, extremely important. Okay, so what this will do is it will maximize that safety component for you in each trade without capping your upside. So what it will do for you is it will not only identify short-term, even day trading opportunities. I'm going to show you many in any market. Works on stocks, futures, forex, you name it. You can definitely trade this with options. You can not only make it safer with options, you can leverage this with options. We have a video course that goes with this indicator that will explain to you exactly which trades you want to take and which you won't. I'll expand on that as we go through the presentation. But again, this was designed to catch those massive trades. If any of you are managing a retirement account or like to trade longer term, you're really going to love this. And I'm not saying that to say that it won't work shorter term. It absolutely will. And I'm going to show you several examples. But if you're trading for the longer term, this will be massive for you, because not only does it catch those big moves, and I'll show you several, but along the way, of course, you could be collecting dividends. If you're trading dividend paying stocks, you can sell calls against your stock to bring in even more revenue. There are a number of ways that you can leverage this. And lastly, you can also use this to help predict the major market moves in the overall market. So by looking at the S&P 500, for example, this will identify when a bear market ends or when a new bull market begins, etc. So let's get to the charts now, and let me show you how this will work. Now, this is my Metastock platform, and this is a chart of AMZN. Now, the reason why I'm showing you this right now is just to give you a tip. I share this at most of my presentations, that one of the quickest ways to sort of put the odds in your favor when you're trading is to make sure that you're trading charts that are clean, easy to read, and have a very strong trend in place with momentum behind that move. When you're trading with trend and momentum, half the battle's already won before you place the trade. So a chart like this, you can see it's very easy to read. Obviously, throughout this whole span here, most of the year in a clear uptrend. And then when it starts to turn, it's very easy to read that we're now seeing lower highs and lower lows consistently, right? It's just very predictable. Compared to something like a Tesla, for example. I know a lot of people love to trade Tesla, but have a look at the chart of Tesla. Now, let me just get rid of that. I don't want you to see those just yet. I'll add those in a second and show you exactly what those are. But have a look at this choppiness, right? It's just one big picture of volatility. That's what this is. The reason why you want to avoid these charts is that no matter where you get in, the chances of you getting stopped out are extremely high. So you want to trade those strong trending stocks that have momentum behind them and are very, very easy to read. Now, let's go to the SPYs, the S&P 500 here. And I'm going to move it to a monthly. Now, I know you're seeing a lot of diamonds and arrows and little exit flags here. That's the indicator, okay? Let me just explain quickly what you're seeing. These little diamonds, the green diamond or the little red diamond back in here, those identify what we would call a setup candle. That's just a heads up. That is telling you that, hey, there may be a trade coming soon, okay? We're not ready to trade yet, but just to give you a heads up that the system may flag a buy or a sell very soon. If it's a red diamond, okay, you'd be on the lookout for a red arrow, which means a short trade. If it's a green diamond, you're on the lookout for a green arrow. Okay. Now, not all setups result in trades. As you can see here, we had a setup, but it never did trigger. Okay. There was something in the formula that wasn't met, and there was at least one piece of criteria missing, and that way it did not get us in. Then it signaled again, there's another green diamond. This time it was followed by the green arrow, which means it's time to buy. Okay, so if you look at this back in the middle of 2012, okay, that's when it told us that the next bull market had officially begun. And as you can see, it keeps you in for the bulk of that move. It got us out here. There's that little exit flag. Things went a little higher, mostly flat, pulled back, and then it got us back in for the next run. And it has yet to call an end to the bull market. We're still in there. So what I was talking about earlier is that if you look at a broad index like the S&P 500, and you go to the higher time frame, the monthly time frame, and you see what you're seeing here, that we're in that bull market, it doesn't mean you have to trade off the monthly, but it means you can go then to the lower time frames, like a daily, for example, and start looking for those long setups, for those long trades, knowing that you are trading in line with the overall longer term trend. And you can do this on individual stocks, you can do it on an index, on an ETF, on a Forex pair, you name it, okay? Let's go back to ABMD. And what I want you to understand here is that even though you're going to see a number of setups, all of these, see how active it is? The intent here is not for you to take every single one, okay? That's not at all the intent here. Now, the reason why many of those are still showing on the chart is because there was no other way to program it. There was a limitation for us in the programming that we couldn't just knock everything out without the software then ruling out other trades. So this is why with the indicator comes along a pro class that we recorded that will explain to you exactly when or which trades to take and which ones you don't. But generally, as a rule of thumb, the ones you definitely want to take are the ones that have momentum behind them. How do we judge momentum? The line here, this moving average, the 20-period moving average. When it's sloping in the direction of the trade, okay, then you should be taking that symbol. If you look over here, when the 20-period moving average was sloping lower, okay, this is a trade we would not have taken, okay? This one here, there was a reason for this, and that's because it changed direction and it took out a previous high. That's the only reason why we would have taken that trade. Now, we go through others in the course, but as a rule of thumb, as I'm flipping through the examples, I want you to focus on the trades that happen along an upsloping 20, or in the case of a short trade, a short sloping 20. The other thing I want you to focus on is that when a trade doesn't go our way, like this one here, just how quickly it will get you out of that trade, okay? So it started, went in our way enough here to call that trade. It went slightly higher. As soon as it started to pull back, it exited, okay? Just like in here. It got in, got us out immediately, okay? Then it got us in again, and that's fine. That one worked out. But when it gets any sense that it could go the other way, it gets you out. And I'm happy to use it that way. You could say that over the span of the year, maybe I'm spending a bit more on commissions, but commissions are so insignificant these days that it really doesn't matter at all. I'd rather have that safety component built in that gets me out and back in if necessary than to not get me out immediately and risk a bigger loss, okay? So have a look overall. The one thing you can notice is that when it makes bigger moves, it pretty much captures the bulk of that move. If you look from here, after this consolidation, right? From in here up to the top, it pretty much caught that full move. That's the intent of Voracity here, okay? And we can look at all different time frames. The time frame does not matter. Here's the weekly, okay? Again, some of these with the flat moving average, you will not take. All of these back here, you would not be taking these trades, okay? In the class, we'll teach you exactly which ones you take and which ones you don't. But whenever there's a bigger move, such as these, you get a nice, strong move. Even if you didn't take this one, again, there was a reason for this one, but let's assume we skipped it. But when you have that upsloping 20, it's pretty much a no-brainer. And that's a very sizable move, going from about the 200 range up to about 450, call it 400 here by the time we got out, okay? So 100% gain in a very short period of time. Monthly time frame. There it is. The other thing that this will do for you is that, actually someone's asking if that's a 20 EMA. No, it is a 20 SMA, a 20 period simple moving average. Okay? Now, a lot of times you'll get a stock like a Biomed, like NVIDIA, like Amazon, for example, like Apple Computer, that early on in the early stages, you know, they spend many months and many years in single digits or just kind of going flat. No one's paying attention to them, you know, etc. But once, you know, they start to take off, it'll generally get you in at the beginning of that move, okay? And so if we go back and look at a Biomed, at NVIDIA, at Apple, at Amazon, these moves are enormous and you can catch them very early on. But again, here's the difference. There's going to be many, many trades that you can take. You're going to see setups all over the place. If you just focus on the ones with that slope. I mean, one of these will make up many, many other losses. And what you'll find here, at least what my experience has been, especially if you focus on the ones with that slope on that 20, you're going to have way more winners than losers, and the winners are much, much bigger than the losses, okay? So, and we can look at all sorts of different time frames. So let's go to NVIDIA, another big name, right? This is the daily. Let's zoom in. Again, all sorts of setups. You don't want them all, okay? There's only so many trades you can have on at any given time. You want the ones with slope in your favor. Now, what kind of slope are you looking for? At least 45 degrees, about that, okay? Now, there's a scanner that goes along with this that I will show you in a few minutes, where you can actually distinguish by slope, okay? You can rank them by slope, but just visually on your chart, you want about a slope like this, about a 45-degree angle, okay? And again, you can see how nicely it captures the bigger moves. Let's go down to a shorter time frame. How many of you day trade or intraday trade? 5 minute, 1 minute, okay? Works the same way. The bigger moves, this will capture, okay? And you see how at the end of that move, you know, it doesn't allow you to give up all your profits. It gets you out pretty much at the bottom of that move. Okay, it's not perfect, nothing is, but it's very, very consistent looking back. Okay, see all the bigger moves, it'll catch for you. Okay, let's look at Netflix. Netflix has certainly been in the news the last couple of days, making some big moves. Let's zoom in here. Now, this is the daily chart. Okay, again, capturing the bigger moves. Certainly nothing to sneeze at either. This is, you know, from about the 320 range up in here over 400, right? Some huge moves. But if you want to look at the lower time frames, let's look at the 5 minute. There it is recently, right? Capturing those moves very, very nicely. Okay. Again, when it doesn't go our way, it gets us out very quickly. You know, keeping losses very small, right? But allowing the winners to run. Now, there's nothing stopping you from scaling out along the way, okay? So, you know, you can trade this any way you like. If you're if you're not comfortable staying in through the whole trade, you can certainly scale out. But I think what you'll find over time is that it's extremely accurate, and once you build confidence in the system, you'll have no problem staying in. The other thing we've done is whenever it gets you in a trade, all the bars are colored in the same for the direction of the trade. In other words, if it's a short trade, they're all colored red. There's a reason for that. And if it's a long trade, all colored green, so that you don't get nervous throughout. In other words, how many times have you've been in a trade like this? It starts going your way, and then, for example, you'd see one big green candle, and you'd start to worry whether or not it's going to turn on you and you're going to give back all your profits or not. So you end up getting scared out of it only to watch it continue to drop, right? So to avoid that and to help you remain disciplined, we color them all the same color. Okay, so it's very easy to follow. If you're trading on a daily time frame, after market close, you just come check out the color of that candle and decide, do I need to get out in the morning or not? No. Okay, stay in it. It's very, very simple. Okay, how many of you trade Forex here, or other commodities, oil, gold? Let's look at oil quickly, and then we'll go to a few commodities. Forex pairs. So here's the chart of oil. Okay, now this is the daily time frame again. Some real nice moves. Remember when oil was over $100 and then collapsed to 40 and then 26 eventually? Now, again, we had no idea how big this drop was going to be, but it caught it. It caught it right from the beginning. Again, here there wasn't much of a slope, but there was a reason for us to get into this trade. It was the start of that slope along with a break of that previous low, the low of that channel. And there it goes. And again, it caught most of the move. You see how it gets you out before you give back the bulk of the profits, right? In this case, it wouldn't have even been the bulk. It was such a big move, but still got us out as soon as it realized there might be a bigger pullback, and then it gets you right back in. This one we would not have taken. Moving average was going in the wrong way. This one we would have taken. Would have been more easy profits, right? And again, it doesn't matter whether it's a weekly chart, a daily chart, a 5-minute chart. Here it is. Most of these you don't touch. If you do get in there and it goes against you, it's a very small loss. Look at the losses in here, all very small, most of which you wouldn't take. And then the bigger one, here it is, right? And again, it gets you out before you give back your profits. Okay, very easy. Earl says, I guess, he trades Forex. Let's look at a few. Let's look at the Euro USD, very popular pair. Let's zoom in here. See, this is the daily time frame. Again, captures the big moves almost without fail. Okay, it took a long time for me to figure out how to keep us in there, okay, while still getting us out very quickly if it turns against us, okay? Again, you can trade it on the daily, on the weekly, on the 5-minute, on the 1-minute, the 15-minute, you name it. Not a whole lot of volume here on the 5-minute. Let's look at something else like the CAD, USD CAD pair, Canadian dollar. Zoom in. This again is the daily time frame. There it is. So again, pretty decent moves. Let's go a little shorter term and see what it looks like. There it is. Again, not a whole lot of volume on some of these Forex on the smaller time frames. Let's look at one more. We can look at the Japanese yen. JPY is what I meant to type there. JPY. Zoom in, bring in the data. There it is. Okay, so it doesn't matter what you're trading. Again, Forex, futures, stocks. It doesn't really matter. Penny stocks, Fortune 500 companies. It really doesn't matter. They all work very well. Let's look at actually one last one here. Let's see if I can get the right symbol here. And this might be a stretch. Bitcoin. Yeah. So this is the Bitcoin against US dollar. And so this is just to prove to you that it doesn't matter what the instrument is or what the time frame is. Okay. The formula works and works really well. Now, to help you with this, because the biggest challenge for some traders is remaining disciplined and following the rules, right? So to help you with this, let's go back, see if we can put on the daily chart here. What we've done is add what we call an expert commentary. So if we go to the top left here, click on view and click on expert commentary, you get this window here. Now, you see this little black triangle that is always defaulted to the far right. So the most recent candle here, it hovers over the most recent candles here. Now, this just happens to be showing, or is on the same candle as an exit flag. So it's telling us to exit that trade. We can move that. We can move that above any other bar by either clicking on it or using the arrows at the top of the expert commentary window here. So when we're above a candle that, it is either black or white, meaning we're not in a trade, what you'll see in this window is an explanation of the indicator itself, a bit about trading winds, a bit about myself, etc. But you'll see this this blank space here in between the paragraphs. There are no instructions in there because there's currently no trade. Okay. Now, if we were to hover over a candle, a setup candle, then we see some writing in there. And if it has anything to do with a long trade, it'll be in green font. If it has to do with a red or a short trade, it'll be in red font. Okay, we try to keep everything consistent. But what this is doing is telling you that it's currently signaling a long trade setup. It goes further on to say, to confirm that this is a valid buying opportunity, you must wait for a trade above the setup bar's high. So it tells you what the criteria is to actually trigger that trade. That way, you can go in and set up an order ahead of time. So at this point, you already know what the setup bar's high is. You can go in and set up a buy stop order, for example, if it were to trigger, rather than sitting around in front of your screen waiting for that arrow to show up. Okay. Now, once it does show up, now the text changes and it says that it's currently signaling a long opportunity. Okay. And then it goes on to tell you that if you're interested in trading this using options, it gives you a suggestion of what kind of options, how far out of an expiration you want to choose, that sort of thing. Okay. And then as the trade moves on, so with every new candle, it will update a stop loss level for you to watch, as well as another indicator that could potentially indicate your exit. Okay, so that you can manage this actively. Okay, you're not just sitting there waiting for that flag to appear. Okay, you can have levels to watch. So along the way, you can be trailing this with the right stop level. Every day, you see as I move forward, the stop level may change. It may not, it may, depending on the progress. So here's 379.51, right? If we move a couple candles further, now you see it's 393.77. So it kind of holds your hand throughout the life of the order, okay? A fantastic feature. Lastly, there is a scanner. So if you go to the power console, the P in the top left corner here, go to Explore here, and now at the top section, you choose whether you want the setups or the signals. The setups are the little diamonds. The signals means the ones that have already triggered. You can search for both. I'll just do setups quickly. And then at the bottom, you can go and check which markets you want, okay? I like to do the main indices like the Dow Jones, the S&P, the NASDAQ, okay? Let me just do the Dow and the NASDAQ for now. You pick your time frame here on the right. I'll leave it as daily, okay? And then you click Start Exploration, okay? Once you start, you'll see this start to work here. And this progress bar, there it goes. This progress bar will tell you how many results have potential trade setups, how many were rejected, etc. You'll get your list here, and you can save your list. You can cut and paste it into a watch list. You can print it. You can open a chart directly from here. You name it. Now, I have a lot running on my machine, but again, you see how quickly that worked out. And here are your trade candidates right now. Okay, so Boeing, United Tech, there's a couple of Forex pairs, you name it, whatever you want to search. And then if you highlight it, you can just click Open Chart, and you'll see the chart open up in the background there. There it is, okay? It's a fantastic strategy that has been extremely consistent over many, many years. But let me tell you about the package that we've put together, because that course that goes along with it is extremely important. So if you go to tradingwins.com/now, it'll take you to this page where we've put together two packages. One we call the Platinum package, and the other we call the Day Trader package. The Platinum package gives you the full Voracity indicator. So everything I showed you today, the diamonds, the arrows, the exit signs, along with the expert commentary, the scanner, all of that, along with a lifetime license to the Metastock software, the daily close software. Also, our technicians will get on the phone with you to install the software for you, make sure that it's up and running properly. We'll give you 2 months of data at no charge, and it comes with 2 training sessions, okay? 2 recorded sessions where we will teach you again which trade to take, which one to not take. Along with that, you also get a 30-day membership to our Trading Wins Pro service. The main reason for this is that you're not left alone with the software. You have an opportunity to come back to us, ask me any question you like on the system or anything to do with trading in general, and I'll help you out. With this membership, you will get 5 videos every week, nightly videos, every Sunday to Thursday, okay, recapping what happened in the markets that day, where I think things are going, and we also, that's also the platform where I share some trade ideas as well. We also have 2 market chats per week. That's where our members get together. So as a member, you're gonna be able to come into our room and ask me any trading related question you like, twice a week for an hour at a time, every Monday evening, every Thursday morning. Both of those sessions are recorded and put into your own video library as well. And also, as a pro member, we do what we call a course of the month every month that is at no extra charge for our members. So you'll get that as well. You get the live invite and the recording of that. Now, the Day Trader package, the difference here is that it is focused around day trading. In other words, you get everything that you get in the Platinum package, plus 1 extra recording, 1 extra training session that has to do with day trading options, okay? You also get the lifetime license to Metastock, this time the real-time Metastock license. You get all the bonus training videos, but you get that extra one with my option plan for intraday trading. In this package, you get 3 months of real-time data at no charge and a 60-day membership to our pro service, okay? Again, Platinum and Day Trader, just go to tradingwins.com/now. I believe I am out of time here. Let me just see. TJ says, does it work with tick charts? TJ, honestly, I haven't tested it extensively, but based on the programming, I see no reason why it should not. Yeah, not a problem. And okay,